Welcome to Dave's Daily Crypto Take. Today's Tuesday, February 22nd. Let's take a look at today's charts. At number one, we got BTC, $37,217.18, down 3.66%. At Ethereum, number two, $2,595.20, down 2.43%. Tether at number three, $1. At number four, BNB, $359.61, down 6.32%. USD coin, number five, $1. At number six, XRP, 71 cents, down 9.88%. Cardano at number seven, 86 cents, down 8.57%. Solana at number eight, $84.13, down 9.16%. Terra at number nine, $51.05, up 1.15%. And last but not least, number 10, Binance USD at $1. Let's take a look at the crypto fear and greed index. Extreme fear can be a sign that investors are too worried. That could be a buying opportunity. And when investors are getting too greedy, that means the market is due for a correction. So what we got today is extreme fear at 20. Yesterday was extreme fear at 25. Last week was fear at 46. And last month was extreme fear at 11. Let's take a look at our 5 articles today. Article number 1 is $8 or $58, third or seventh, what the experts say about where Cardano will go. In 2021, Cardano was the third biggest crypto by market cap, breathing down Ethereum's neck. However, 2022 saw it in 7th place. To that end, Finder's panel of fintech experts came together to predict ADA's future price performance. The final estimate was well worth a read. A full deck of Cardano. To make a long story short, the target is for ADA to hit $2.79 by the end of 2022. It might not remind investors of Solana's dazzling rise of $100 and beyond, but is still a 168% rally. Things really take off, however, in 2025, which is when the panel guessed that ADA would hit $8.18. The 2030 prediction is $58.04. At press time, ADA was trading at 93 cents. This after falling by 6.01% over the last 24 hours. So what do experts think about the crypto's fall in price? Well, there are a number of convincing theories. 24 panelists felt that it is due to the absence of market shares in TVL, the initial period after the Alonso update, and general volatility, among other factors. Put numbers to words. Market cap dominance is one way to judge the strength of a crypto asset. Looking at ADA, however, reveals a steadily failing dominance from close to 4.5% to less than 2% over the course of the past few months. On the contrary, the real shocker was when ADA fell from 2% to 0 in the space of a day. Now there are signs of growth as well. In late January 2022, developer activity on Cardano reached heights not even seen since the summer of 2021. Dev activity on Cardano seemed to rise along with ADA's price. Ergo, it's not surprising that the most recent drop led to a small decline in developer activity as well. Here, it's worth noting that consistent developer presence is a good sign of a network's potential. It's also important to remember that not everyone is bullish. In particular, Joseph Rosinski, a technologist at Thomson Reuters, feels that Cardano has failed to deliver on its promise. What's more, he believes the asset would fade away in the future. A case of hare versus tortoise. Crypto researcher Max Mehar took a slightly different view of Cardano. Shortly after the December crash, Mehar claimed that Cardano is hurt by its own hype. Alas, he concluded, quote, I wouldn't bank on it in a month or even 2 months, but come 3 to 6 months, I think that we'll see many solid usable dApps running on Cardano. So there you guys have it. What do you think about this article? $8 or $58, third or seventh, what the experts say about where Cardano will go. Comment down below and let me know what you guys think. Okay, article number 2 is Crypto Capital Gains and Tax Rates 2022. Love it or hate it, tax season is here, and that means all U.S. citizens that traded or sold crypto over the last year will be required to report their gains and losses. According to an IRS notice published in 2014, cryptocurrencies, including NFTs, are classified as property, meaning they are liable to a capital gains tax similar to stocks or real property. A capital gain occurs if you sell a crypto for more than your initial investment. For instance, if you buy one Bitcoin for $20,000 and sell it for $50,000, you have made $30,000 of taxable gains. In other words, if you make a profit from the sale of a crypto or a non-fungible token, NFT, you trigger a taxable event in the eyes of the IRS. Sounds simple, right? But before you jump the gun and consider yourself a professional crypto tax accountant, here are some things you should know about capital gains taxes to avoid any deadline day stress. How are crypto taxes on capital gains determined? The length of time that you hold your crypto will affect the amount of capital gains you will be liable to pay. If you hold cryptocurrencies for 12 months or less, short-term capital gains tax will apply. If you hold crypto for more than 12 months, you will be subject to a long-term capital gains tax treatment. According to the IRS, your holding period begins the day after you purchase a crypto. So it's important to know when you received your crypto asset and what tax rates and rules apply when you sell or trade it. Short-term capital gains for the 2021 reporting year, the federal short-term capital gains rate is the same as your ordinary income tax rate, where your tax rate is dependent on your total income, ranging from 10% to 37%. So here are all the listings from 10 to 12 to 22% to 24, 32, 35, and 37. And there are single filers, married couple filings, filing jointly, and head of household. So let's take a look at some examples. For instance, let's say you earn a salary of $80,000 and made $10,000 in short-term crypto investments. Your taxable income sits at a combined amount of $90,000. The first $9,950 of your salary will be taxed at 10, and the income between $9,951 to $40,525 is subject to a 12% tax. Finally, income earned in the $40,526 to $86,375 will be taxed at 22%. Since you made $10,000 in short-term crypto investments on top of your $80,000 wage, the portion of the short-term crypto investments up to $86,375 threshold would be taxed at 22%. The remaining $3,625 of the gain would be taxed at 24%. The long-term capital gains, however, is if you hold crypto for a period longer than 12 months and then opt to sell or trade that crypto, you will be subject to a long-term capital gains tax treatment. Long-term capital gains tax rates have different rates than the short-term capital gains, ranging from 0% to 20%, depending on your total income. This is much lower than the short-term capital gains brackets and encourages investors to make longer-term investments. So there are different versions for single, married filing jointly, married filing separately, and head of household. Let's look at a theoretical example of how long-term capital gains can save money compared to short-term capital gains. Chart below shows a married couple with $100,000 earnings jointly filing their capital gains for selling 10 ETH at different times. Price of ETH is not based on current price in the example. The couple could save $70 by holding on to their assets for more than 12 months. This may not seem like a lot in this example, but imagine if they were selling 1,000 ETH. That would be still taxed at 15% rate for long-term capital gains and result in $7,000 saved in taxes. So taxable events, having looked at two types of capital gains, you may face an importance of understanding timing when disposing of crypto. Let's look at what events can trigger a capital gains tax. 1. Selling crypto. The most common capital gain trigger event occurs when you sell your crypto for fiat currency. For instance, if you buy 2 ETH for $1,000 and you sell them for $2,000 6 months later, you will report a short-term capital gain of $1,000 and be taxed on that amount. The same applies for a long-term capital gain if you hold your ETH for more than 12 months. 2. Using your crypto to purchase goods and services. If you use crypto to purchase a good or service, you'll be subject to a capital gain tax. Let's say you bought one Bitcoin for $100 in 2013 and have not touched it since. Now the Bitcoin is worth $60,000 and you decide to purchase a new car for $60,000. As a result, you incur a long-term capital gain of $59,900. The difference between the cost of the car and the value of your Bitcoin when you bought the car at $60,000. 3. Trading one crypto for another crypto. Trading cryptos is considered a taxable event, regardless of if they are traded directly one-to-one on Uniswap or on an exchange. Let's say you purchased 10 AVE for $200 each for a total of $2,000. Later, you traded all your AVE for ETH at the same time of the trade. AVE's price is $500, bringing your total AVE holdings to $5,000. Here, you incurred a capital gain of $3,000 that you'll have to report. The difference between your value of your 10 Aave when you purchased and the value of your entire Aave holdings at the time of trade. This also applies when you use an NFT to purchase crypto. Well, there are special cases. 1. Crypto donations. The IRS considers crypto donations the same as cash donations, making them taxable deductions. The existing limits for deductions range from 20% to 60% of adjusted gross income. However, for the calendar year 2021, you can apply to increase your limit up to 100%. This means you can apply to deduct all your crypto gains and pay no capital gains tax. However, if you sell your crypto and then donate the after-tax cash to a charity, the capital gain could be short-term or long-term depending on the holding period. For more information on donations, click here. 2. Crypto gifts. If you make a crypto gift to someone, make sure it's below $15,000 since no gift tax would apply. If you go over, you'll have to file Form 709 and will owe taxes on the gift. However, if you receive crypto as a gift and decide to sell the crypto, then your cost basis will be the same as that of the gift donor and you will have to pay capital gains. 3. Inherited crypto assets. Inherited cryptos are liable to the same estate regulations as any other asset class. So, calculating your capital gains. Since 2019, the guidelines on how to calculate crypto-related capital gains has become clear. In practice, there are 3 ways that you could calculate your capital gains, and they can make a big difference on the amount you are taxed. 1. FIFO. First in, first out. Calculates your tax from the time you purchase your crypto to the time you sell it. Using the FIFO method means capital gains will be based on the price of the first of the 5 Bitcoin purchased on March 19, 2017, for $500 each, or a total of $2,500, for example. A buyer later sells them for $2,000 each for a total of $10,000 in the same 12 months. Selling price purchase minus purchasing price, first bought Bitcoin equals taxable gain. So 5 times 2,000 minus 5 times 500 equals 7,500. LIFO, last in, first out, calculates your taxes by the last unit purchased and considered it as the first unit eligible for sale. If you bought 2 Bitcoins on March 19, 2017 for 500 and 3 Bitcoins on February 6, 2016 for 400, the calculation will look like this. Selling price minus purchase price, last bought Bitcoin, minus purchase price, first bought Bitcoin equals taxable gain. So 5 times 2,000 minus 2 times 500 minus 3 times 400 equals 7,800. Number 3, HIFO, highest in, first out. Calculates your taxes by taking the coin with the highest purchase price as the one sold first. If the highest price paid for the 5 Bitcoins you were selling was $500 and you purchased 3 Bitcoins at that price, and then 2 more Bitcoins at 400, the calculation will look like this, regardless of when you bought those Bitcoins. Selling price minus highest price Bitcoin minus next highest price Bitcoin equals taxable event. 5 times 2,000 minus 3 times $500 minus 2 times 400 equals $7,700. With all that said and done, it is important to make sure you keep your crypto transactions in check and record them before taxes are due. This can become even more complex once airdrops, liquidity pools, staking, and other crypto products come into play. That's why it is a good idea to record your trades and potentially seek advice from crypto tax tool experts such as Accounting, CoinTracker, CoinLedger, TaxBit, TokenTax, ZenLedger. By understanding your capital gains and knowing how you might best reduce your tax liability, you will escape the hot seat on a tax deadline day. So there you guys have it. What do you guys think about this article right here? Crypto capital gains and tax rates 2022. Comment down below and let me know what you guys think. All right, article number 3. Whales are counting sheep and Bitcoin may finally be ready for. So will it or won't it? That is the question many crypto investors have as they wait the breath of Bitcoin to either cross 40,000 again or drop back to its $35,000 lows. However, not all investors are equal and there are some factors to keep in mind. Whales are counting sheep. Bitcoin whales with a balance of between $100,000 and $100,000 BTCs have not significantly risen or fallen this month. Curiously, this was all in spite of drastic price changes. In fact, one crypto analyst suggests that the whales might be waiting for a sale so as to snap up the king coin at even a lower price. In light of Bitcoin falling below 34,000 in late January, this might not be a far-fetched idea. If that wasn't enough, the analyst also noted that the number of new addresses entering the Bitcoin network has been moving sideways for the most part. The analyst linked this to a lack of interest in the spot markets. There are tweets. First, the number of whales on the network with 100 to 100,000 has remained flat since February 1st. These wealthy market participants do not appear interested in buying BTC at the current price levels and could be expecting buying Bitcoin at a discount. And Bitcoin, the lack of interest in the spot markets can be seen in the number of new daily BTC addresses joining the network, which has remained stagnant at an average of 400,000. A spike in this on-chain metric can signal the continuation of BTC uptrend. A look at exchange supply, however, provides a much clearer picture of what investors might be doing. With the number of Bitcoin on exchanges has been on a steady downtrend thanks to the King coin's popularity, the end of January 2022 brought an especially sharp drop. This was likely due to many buying the dip. However, there have been about 2.04 million BTCs on exchanges since 18th of February. But how are investors feeling about this lull in activity after weeks of dramatic changes, crashes, and price movements? Well, weighted sentiment has turned negative again. What's more, on 19th of February, it hit a level of minus 1.33 and not seen since the fall of 2021. While this may look dire, it's important to remember that negative sentiments have the potential to trigger a price rally. At press time, Bitcoin's price has dropped below the $39,000 mark yet again. So a change of scenery, it might look like Bitcoin whales are and investors are feeling listless, but that might not be the case worldwide. In Canada, where the government is trying to cut off crypto funding to the Freedom Convoy protesters, interest in Bitcoin is rising. In fact, Purpose, a Bitcoin spot ETF, recorded formidable inflows of more than 1,000 BTC in a single day. The Canadian Purpose Bitcoin Spot ETF just saw one of its biggest inflows ever on Friday, adding almost 1.2K BTC in one day, only surpassed by inflows in one of its first trading days on February 22nd, 2021. AUM now at a new all-time high with 32.26K Bitcoin. So there you guys have it. What do you guys think about this article? Whales are counting sheep and Bitcoin may finally be ready for. So what do you guys think? Comment down below and let me know what you guys think. All right, before we get into round 2 of the articles, just want to say thank you so much to everyone that's been listening. Again, you can catch me on Apple, Spotify, Google Podcasts, and if you're in the YouTube space, please like, share, and subscribe. All right, so let's get into it. Everyone, round 2 is Biden to issue crypto executive order this week. Bad news for the US dollar. United States President Joe Biden is poised to release a crypto executive order this week, an administration official with knowledge of the matter disclosed. The EO will direct government agencies to conduct detailed examinations of various areas of the crypto asset landscape in order to develop an extensive regulatory framework. According to the reports, the executive order would mandate the Treasury Department, State Department, and Office of the Attorney General to investigate the possibility of launching a digital currency issued by the US Federal Reserve. Biden's crypto policy announcement has been delayed because of a disagreement between Treasury Secretary Janet Yellen and White House officials over the scope of the planned EO, the sources said. Crypto executive order for financial stability. The EO was anticipated to be signed last month, but was delayed due to a dispute between Yellen's staff and National Economic Council officials, the grapevine said, but a Treasury official refuted the claim as incorrect. The Biden administration has made a concerted attempt to regulate the sector on a broad scale. A veteran computer fraud prosecutor has been hired to spearhead the Justice Department's National Cryptocurrency Enforcement Team, while the Federal Bureau of Investigation has formed a special unit for blockchain analysis and crypto asset confiscation. The U.S. Financial Stability Oversight Council, established during the 2008 financial crisis to examine systemic risks, will be tasked with studying economic stability concerns related to virtual assets. Biden EO2 address many issues. Additionally, the executive order will look at steps to protect businesses, consumers, and investors. It will also address concerns such as privacy, distributed ledger technology, and stablecoins. Biden's crypto executive order is the 81st he has approved since assuming the presidency in January 2021. Over a 4-year period, the previous administration issued 220 executive orders, whereas President Barack Obama issued 276 during his 8-year stint. Federal agencies have taken a piecemeal approach to digital assets in recent years, and Biden's staff is under pressure to take a leadership role on the subject. Industry executives frequently lament where they have perceived to be a lack of clarity and certainty on US standards, while others fear that China's and other nations' supports of government-backed coinage could endanger the US dollar dominance. A few countries have already established their own digital currency, but more than a dozen others, including China and South Korea, are apparently working on their own digital currencies. Government agencies will be expected to deal with the challenges and anxieties that occur when dealing with digital currency on a serious level for the long term as part of the White House's full court press on the asset class. Meanwhile, regulators have expressed alarm about a lack of investor safety net and potential threats to financial stability as the crypto market grew to over $2 trillion. So there you guys have it. What do you think about this article? Biden to issue crypto executive order this week. Bad news for the US dollar? Comment down below and let me know what you guys think. All right, last but not least, article number 5, the main topic today. It is called Pro-Bitcoin President of El Salvador to offer citizenship for foreign investors. The 52 proposed legal reforms call for less bureaucracy, less red tape, and creating tax incentives to make El Salvador one of the most freedom-centric countries. So, Salvadoran President Nayib Bukele wants to offer citizenship to those who invest in the small Central American nation. President Bukele took to Twitter to inform the crypto community on Sunday that he was sending a list of 52 legal reforms to Congress. Among the most notable proposals, Bukele called for the removal of red tape, reducing bureaucracy, creating tax incentives, and most importantly, offering citizenships to foreigners looking to invest in the nation. Nayib Bukele tweets, "I'm sending 52 legal reforms to Congress to remove red tape, reduce bureaucracy, create tax incentives, citizenship in exchange for investments, new security laws, stability contracts, etc. The plan is simple. As the world falls into tyranny, we'll create a haven for freedom." The president promised to make El Salvador one of the most freedom-centric countries at a time when the world is falling into tyranny. Bukele has become a flag bearer for Bitcoin adoption, but an equally controversial figure in international politics for the same reasons. Recently, a bipartisan group of senators in the United States introduced new legislation seeking to mitigate risks posed by El Salvador's adoption of BTC as a legal tender. President Bukele rebuked the new legislation and called the US senators boomers, while reminding them that they have zero jurisdictions on a sovereign and independent nation. Okay, boomers, you have zero jurisdiction on a sovereign and independent nation. We are not your colony, your backyard, or your front yard. Stay out of our internal affairs. Don't try to control something you can't control. El Salvador is all set to launch its much anticipated billion-dollar Bitcoin volcanic bonds in March next month. The funds generated from the bonds would be used to build the world's first Bitcoin city. El Salvador made history last year in September when it became the first country in the world to make Bitcoin a legal tender alongside the US dollar. While most international organizations, including the World Bank and the International Monetary Fund, continue to issue warnings against all impacts of using BTC as a legal tender, the country reported achieved a gross domestic product growth of over 10% in the highest in its history. Nayib Bukele tweets, El Salvador's GDP grew 10.3% in 2021, and now its exports, a main driver of economic growth, grew 13% this January compared to January 2021. Are we looking at another double-digit GDP growth this year? By the way, El Salvador never had a double-digit GDP growth before 2021. So there you guys have it. What do you guys think about this article? Pro-Bitcoin president of El Salvador to offer citizenship for foreign investors. Comment down below and let me know what you guys think. All right, let's take a look at the prices one last time before we head out. At number 1, BTC is at $37,226, Ethereum $2,596, Tether $1, BNB $359, USD coin $1, XRP 70 cents, Cardano 85 cents, Solana $83, Terra $50, and last but not least, Binance USD $1. So there you guys have it. Thank you so much for making it this far into the Crypto Take podcast. Again, this is Dave's Daily Crypto Take. Catch me on Apple, Spotify, Google Podcast. And if you're on the YouTube space, like, share, and subscribe. Other than that, I hope all of you have a great crypto day, and I'll see you guys in the next one. Peace.